Up next is a discussion with JSW Steel. There's lots to talk about. A, the impact of the rupee depreciation, and secondly, if the iron ore royalty goes up, what will be the impact? Seshagiri Rao, the joint MD and Group CFO of JSW Steel, now joins us. First, Mr. Rao, could you outline what impact the rupee depreciation has? And, with the rupee, closing the June quarter at levels of about a 59.5 thereabout, what could we expect the impact in Q1?
No, there will be translation losses on companies which have the foreign currency debt. But as we have been clarifying that JSW Steel economic exposure wise there is no problem. Whether the steel sold in India or overseas, it is a dollar linked. So if rupee depreciates, we will be able to get more revenues even in the domestic sales. Therefore, there is a natural hedge which is available.
Okay.
But at the same time, there will be volatility in the earnings due to very steep depreciation of rupee. That will lead to translation losses in the profit and loss account.
Okay. Let me come to both points, Mr. Rao. First, you said that there is this natural hedge since landed steel is also dollar denominated. But given the state of demand in the country, will you really be able to raise prices even if the landed price went up?
No, it is possible because the pricing in the domestic market is majorly linked to the landed cost of import of steel. So if it is so, then the pricing will be determined based on landed cost. So it is possible to do that. Okay. Even the demand is not robust enough. The pricing methodology has been agreed for the last several years, which is being followed in the domestic market.
Okay.
So I don't think there will be a problem in working out what is the landed cost if the rupee dollar is 59.50 or 60 rupees if we take into account.
No, and the reason why I'm asking is we haven't got any announcements from any of you. Today is the 1st of July. And you are staring whether on a quarterly basis or on a monthly basis at depreciation of about close to 10%. So should we expect some announcements today?
No, what is important to note is that the iron ore prices internationally are falling. Similarly, coking coal prices in dollar terms are falling. At the same time, steel prices are also falling.
Okay.
So when the rupee depreciates, when the international prices of steel is falling, then we have to see the overall impact, how much we will be able to pass it on or should pass on to the consumers. So we are working out with various user industries and the various customers. So that will be, we will be working out how much would be the increase.
Okay. Since you follow the markets very closely, Mr. Rao, what is your sense? Will you, as the finance head of such a large group, be preparing for greater depreciation? How is the year ahead looking to you from the kind of exposures and the talk that you are witnessing?
No, I am seeing a lot of commentary as far as the rupee depreciation is concerned, but I personally believe that whatever has happened in the last few weeks, I don't think rupee is deserving to be depreciated so much in just few weeks time. So in fact, if you really analyze even fundamentally, the current account deficit per se is not bad for a country like India, which is developing. And also 30% almost of our GDP is in the form of investments. So current account deficit per se is not bad for our country. So only debate is whatever current account deficit we have in the last 2 or 3 quarters or more than a year, is it excessive or should we do something on the increasing current account deficit? Number 2 is how we are financing this current account deficit, whether it is financeable or not, and whether our external debt is worrying for us. There are the 3 issues I think one has to debate. But in my view, current account deficit, when it is going little higher, I think there are adequate steps that have been taken. One is the petroleum products pricing as per market rates in the market. That is a very good development which bring efficiency in utilization of oil. Number 2 is the gold side. There are a lot of efforts which have been taken. So these two together in my view will contribute quite significantly for reducing the current account deficit going forward. And also the correction which we had seen in the Q4 of last year, which is also indication that it is trending towards a lower current account deficit going forward. What is also very relevant to see this non-oil and non-gold if you take, then it is not very worrisome for us as far as the overall deficit is concerned.
Okay.
Similarly, we hear a lot of things about our external debt. In the external debt also we had $292 billion of total reserves, and everybody talks about what is the future payments in the next 12 months time, which is a very large sum. Then there will be a problem. But the short-term debt which everybody is talking about is $92 billion, 92 billion with reference to $500 billion of imports. So that will become zero, therefore there will be a problem. I don't subscribe to that view at all. Because when we are importing, we are getting a 6 months credit, not only as a company, JSW Steel, but the entire country.
No, that point is taken.
This will be rolled over.
Sir, that point is taken, but basically the average, the ratios itself look bad when your external debt has ballooned to 390 billion and reserves are at 290 billion. That ratio, which was actually standing 1:1 2 years ago, is now looking so adverse. But in any case, let's shift focus to what you spoke about your own company. You all have about nearly 4,500 crores of FX debt. Won't any MTM pass through the P&L? You all have chosen to take it on your balance sheet, or will it reflect in the June 30th P&L?
No, there is no discretion available to the company. We have to follow the accounting standards. Based on that, whatever pertaining to the revenue, we will take to P&L, which we have been consistently doing. Whatever is capital, it will go to the capitalization. So there are the two things which we have been following consistently. So we will do, even for the last quarter, which ended in June, a similar policy which we had followed in the past.
So it's been close to about a 10% fall in the rupee in the quarter gone by. You perhaps would have calculated the M2M loss that we will see on the P&L. Could you, give us a rough idea of what it could be, the forex loss?
No, we are in the process of quantifying that, because we also have the forex assets. Forex assets means there are some investments which have been made, so there is a positive gain also on that. So net we have to take into account.
All right. So there is also a proposal from the government to increase the royalty rate by close to about 50%, which means from the current 10% of sales price, they're looking to increase it to 15%. So if that happens, what would be the impact on something like a JSW Steel, A, and secondly, even for the industry, how do you read it?
No, there are different pricing methodologies being followed in India as far as royalty is concerned. But if you see, as far as Orissa is concerned, the royalty is being borne by the mining companies, taking into account the net back price calculation. Net back means if they export, what would be the realization to the mining company? That is the price which is charged to the steel companies. So if any increase in the royalty will be borne by the mining company, of course it's based on international prices. Assuming international prices remain same, when you calculate net back, what is the realization to the mining company? If royalty is high, they will get lower realization. Therefore, it will be borne by the mining company. But a similar principle is not followed, unfortunately, in the Karnataka, where it is being auctioned. Iron ore is being auctioned. In that, the pricing methodology has been changed once the e-auction was introduced, saying that the royalties and taxes will be to the account of the buyer. Therefore, there is an extra cost if royalty is increased, which this point has been taken up both with the monitoring committee and the authorities concerned, that they should follow a consistent principle across India, rather than creating a artificial scarcity in the state of Karnataka and penalizing the steel companies which are located in that state, not creating a level playing field across India.
Okay, just one word, Lata, before I let you. There are some more details. M&M June auto sales have come in at 38,092 vehicles versus 43,460. So that's a pretty sharp decline that we have seen on a month-on-month basis, and this is much lower than what we were expecting. We had expected it to come in flat at about 43,000 thereabout, but it's actually fallen by significant, by more than 10%, and it's come in at closer to 38,000. So that number looks fairly disappointing. These are the auto sales numbers. We'll try and get tractor will come out perhaps in a bit, and then we'll get an idea of the total amount, but at least the auto sales have come in lower than what the street was expecting by a significant margin.
Steep fall in M&M's stock price, down about 1.4% after the news came in. They were almost flat, and that's a 12-13 rupee fall. Until now, that was one company which was able to kind of report at least flat sales or even higher sales up until April, and then flattening out. But now this is a steep month-on-month fall. And
12-13% month-on-month fall versus an expectation of of an increase. So on a month-on-month basis, or versus expectation of flat growth, but on month-on-month basis, it's fallen by 12 to 13%.
Yeah, it's a mix of poor demand situation in the country, the tax on SUV vehicles, as well as of course the building higher cost of diesel, and they are a huge diesel vehicle manufacturer. All that is compounding. This is the first taste of the slowdown in the auto sales that is hitting the M&M monthly sales number in all its ferocity. Everything combined together now, and that's the total PV sales coming in, and that also is showing as almost what 25%, 20% fall in, I think 25% fall in total sales. That's fairly significant coming in from M&M, one of those much better performers, the outperformer really in the four-wheeler space. Okay, Mr. Rao, what is the actual situation now in of iron ore in Karnataka? What were the prices at the latest e-auction telling you, and therefore what can be your capacity utilization going by the availability of iron ore there?
So there are 12 mines which are operating in the state of Karnataka right now, in addition to the 2 mines of NMDC. So the total iron ore that is freshly produced, which is coming into the market, is close to 14-15 million tons. In addition to that, as per the Honorable Supreme Court order, balance category A and category B mines also to be opened, and in addition to that, there is subgrade material which also required to be auctioned. So they are in the process of completing these formalities and get these mines also opened. So in the next few months time, we expect the iron ore situation should improve. But at the same time, the prices in the e-auction are higher relative to, as I explained, compared to the Odisha prices. And when the international prices are falling, they are not getting adjusted because of the scarcity and the demand for iron ore from various steel companies, depending upon the iron ore in the e-auction. So prices are high in the e-auction.
Okay. What about demand itself? I mean, if you looked at the way Mahindra's sales have come in, the others were already showing falling sales, Mr. Rao. Now Mahindra it's a toppling of 20% in their total PV sales. Are you seeing a fall in demand, and are they do they buy from you?
Demand is not robust, but yes, auto sector is not doing well. That's why you see month after month declining trend as far as the auto sector announcements are concerned. But in the case of rural and semi-urban areas, we see the construction activity still is okay, where we are getting good orders for the TMT bars. Majorly, it is reasonably okay, I should say. But overall, I don't see a huge amount of demand growth. Demand growth is very, very sluggish. It is in the range of 3 to 4%. That is what we are seeing in the market.
Right, we'll leave it at that, Mr. Rao. Thank you very much for joining us. Incidentally, the rupees perhaps will give you some joy. It's down to almost 59 now, 59.08. I thought I saw one tick, 59.09. A fairly sharp appreciation or recovery, if you please, of 0.5%. Good recovery in the markets as well. But real economy numbers have all been bad.